We are launching Cautious Managed as a natural evolution of our long-standing managed fund, a one-stop shop to the best ideas at Baillie Gifford for clients who require a more balanced portfolio. Launched in 1987, the managed funds philosophy hasn't changed. Keep it simple, stay consistent to our process, and let long-term compounding do the heavy lifting. Now we're applying the same proven process to Cautious Managed. It's the same underlying investments, just a different asset allocation. 50% equities, 45% bonds, and 5% cash to help smooth drawdowns.
We know that some of our clients want a smoother path to compounding returns, but without changing how we invest. We've listened to that feedback, and we believe Cautious Managed can build upon the success of the managed fund. Our disciplined approach has carried us through a number of market cycles and crashes, and you will see periods of both over and underperformance in the short run, but our edge is to stay patient, ignore the noise, and let returns compound over the long term, where our record is excellent. If you like how managed compounds over time, then Cautious Managed is the gentler ride for clients who want that same team and process, but with less equity beta.
What is important is clients are getting the same people, process, and expertise that have powered the managed fund for decades. The only change is the starting asset mix, dialing down equities and dialing up fixed income. Cautious Managed has 50% in equities versus 75% in managed. The underlying portfolio of equities remains the same in both funds, providing bottom-up, active growth as you would expect from Baillie Gifford and the managed fund. Cautious Managed has exposure to the best ideas across Baillie Gifford from the underlying regional teams, whether that's TSMC in emerging markets, Amazon in the US, or M&S closer to home.
Equities are balanced by fixed income. We run a global best ideas portfolio across both corporate bonds and developed and emerging sovereign bonds. Within sovereign bonds, the biggest opportunities are found by identifying the longer-term path countries are on. We set our currency and interest rate views through regular macro debates that weigh up an economy's structural path against cyclical forces. For corporate bonds, resilience is underappreciated as a driver of long-term returns. Therefore, every investment is supported by forward-looking research to uncover a company's long-term prospects. This focus gives us the confidence to invest with patience and conviction as we seek to add value through bottom-up bond selection, much like our equity colleagues. The average credit rating is BBB, made up of bonds from companies such as Mitchells & Butlers and from Brisbane Airport. Just like managed, oversight of the fund is still maintained by our policy setting group, which meets quarterly to decide the balance between equities, bonds and cash, prioritising bottom-up enthusiasm over top-down market timing. All of this takes place under one roof in Edinburgh with face-to-face discussions between Iain, myself and the wider team.
Cautious Managed sits in the IA mixed 20 to 60% shares and is designed as a core holding for risk-aware clients, ideal for mid-range risk profiles. And it's deliberately broad. 200 plus equity holdings across the UK, US, Europe, developed Asia and emerging markets, balanced by our global bond sleeve and a small cash reserve, providing clients with a truly diversified proposition. Actively managed, it's a one-stop shop of the best ideas across Baillie Gifford. Now we know fees are an important consideration for clients, and the managed fund has always been one of the lowest cost funds in the sector. Cautious Managed will be exactly the same. And even better, for the first 3 years, B-class shares will have an attractive fee discount of 30% on the annual management charge. This means you will pay an annual management charge of 0.28%, with the total ongoing charge currently equating to 0.32%. We are very excited to launch Cautious Managed that builds on the legacy of our managed fund. We think now is a great time to invest.